Today, I'm going to talk about how to accelerate your retirement with low cost, very high cash flow rentals. Welcome back once again. This is Seewing Yee, and I'm going to dive right deep into it. Let me show you a slideshow. All right. So, even with a low paying job, actually, you can become a millionaire, but it'll take time. It's not a get rich quick scheme. All right. So it's a long term buy and hold. I just want to warn you ahead of time. But this is very exciting. Something that we've been doing for a very long time, myself, our company, and also our turnkey provider, wholesaler in this particular market. Now, this real estate portfolio are typically in a Midwest type stable market. It's a tertiary market, meaning it's a this kind of market, or no different than in the Midwest. This particular market is in Buffalo, Niagara Falls. Yes, upstate New York, not to be confused with New York City. Is a totally different market, just so you know. And anyway, a typical Midwest market whereby over many years, real estate investors have targeted this type of rentals for their retirement, for buying cash flow properties. You can make the argument this kind of property is available in a typical Midwest places like Cleveland, Ohio, or Memphis, Tennessee, or Dayton, Ohio, or Gary, Indiana, or Detroit, Michigan, or Chattanooga, Tennessee. This low cost high cash flow markets, if you find the right team, especially if we from out of state, of course, our main office is located in Bay Area. And so anyway, a lot of out of state investors from California, from Jersey, New York City, and in high coast areas for years, they've been coming into this market to buy cash flow properties to achieve the retirement. So today's presentation is no different. Again, it's all about the team that you hire. So we happen to have work with an outstanding team that been doing business in this market for the past 30 years. 30 years, yes, 30. I did not stutter. I think I almost did. Anyway, we've been working with these people for a very long time. They know the market. They've been running their business. They buy stress properties in the local market at a very deep discount. They rehab it. They use very high quality materials. They do so much volume in their market, their niche, such that they got a lot of discounts from selling, from doing so much volume from their local Home Depot. All the savings are passed on to retail investors such as you guys. Out of state investors, you can purchase this remotely, almost passively, with your own name. That's right, your own name. You don't need to partner with anybody. Again, you find the right team, in which we have. This is turnkey. Is everything's one stop shop. It's one umbrella. And this is again, the name of this company is Buffalo Turnkey. We have worked with them for a number of years now. We have hundreds of those investors, and mainly from California, buy remotely, passively, out of state long distance properties with a full outstanding property management. They are very reputable, the whole 9 yards. They have their own rehab team. This kind of properties is, you can finance this because it will go through appraisal properly, and you buy it. This is a great deal. You buy like 10 to 20% below fair market value because once again, this is off market. They buy at a distress level. This company, they passed on the savings for retail real estate investors out there, such as you guys. All right. Without further ado, again, this company is outstanding. You can scale. We have a number of investors who have purchased multiple properties over the past 2 years, and they are doing fine. And a lot of these properties are rented. It's a very stable market. It's a C class neighborhood, if you will. It's not a dumpster. It's not a rough neighborhood. It's a working class, hard working, blue collar, lower middle class for renting these type of properties. And the vacancy rate is very low, maybe about 5%. And the occupancy rate is around 90%. So this is a very sustainable long-term investment. Everything is done. Everything is taken care of. You, the property manager will pre-screen the tenant. They will vet the tenant for you. They know the neighborhood very well. They've been doing this for consistently for many years, and they have bucket of listings off market. It's off market. You cannot find this in the multiple listing service. They only work with a network of referral partners like us, this company, uh, who understand this kind of system. So anyway, this is a typical property. It's a 1 to 4 unit, by the way, although single family home, residential, 1 to 4 units. That means single family home, duplex, triplex, and fourplex. And you can get when you buy 1 to 4 unit, one loan for the purpose of Fannie Mae lending guidelines. Again, not everybody like this kind of properties, but this is all we have. We're well past inspection. There's a minor cosmetic repairs. So anyway, it's an outstanding system. A lot of people from out of state are buying into this unique market. This is a family-owned business, but turnkey, very equitable, they have a great track record. They're very transparent. They do everything for you. They pre-screen the tenant. They manage the property for you. You basically, from out of state, wherever you are, sleep very good at knowing that the rental checks are coming into your checking account, not mailbox. I don't think people get rental checks to the mailbox anymore, right? Yeah. Anyway, so this is a typical property, which is amazing. I'm not going to go over too much detail of the numbers, knowing that's this 69. That's right. This is not a misprint. This is a pro forma. These are projected numbers on a typical property. They have many properties on a weekly basis, 30 or 40 properties. They are, they're they can investors like our group can purchase, and other groups and other investors from overseas and in other part of the country has been buying through this company consistently on a daily, weekly, or monthly basis over many years. So very stable market. So anyway, I'll touch briefly on this like 2%. We all hear about 1% rule, right? 1% multiplied by the purchase price, and the rent will be it'll give you a lot of cash. In this case, you're getting a 2% rent to value ratio. That is absolutely mind boggling. The capitalization rate is 16.6%. Again, this is beyond belief. Captain cash return 35%, and total return on your investment at the end of the first year only is almost 15% because you need the power of leverage. Of course, you can buy with your IRA, you can buy with cash because these properties are so cheap. But if you want to scale, if you want to make your money work hard for you, I prefer you do a loan. We do a 25% down payment. Yes, we have lenders that are willing to finance these low price point properties, and not very few lenders in this country are willing to do a loan this small. But we have a vetted our lenders, a couple of them that are willing to help you finance this property, which is amazing. It's duplex, 2 doors for 69 grand. Okay. You can negotiate it if this is the price. Take it or leave it. Anyway, 25% down payment, $17,000. Well, it's less than 3 grand for your down payment and closing costs. All right, 21,000 including closing costs. But even with a loan rate of 6.8 to 7%, 30-year fixed rate mortgage, even with this financing, you can still cash flow monthly at $616, which is absolutely mind boggling. Once the interest rate, even when the interest rate, look at you date the mortgage rate, but you marry the rental. What does that mean? This means that even if you're paying 7% or whatever, based on your credit situation, later on, refinance if and when the mortgage rate comes down to 5.5% or even 5%. We don't know. But when you refinance, of course, when the rates are low, sometime in the future, your cash flow will be even higher than projected on this first year pro forma projection. So the duplex unit get a gross rent of 1350. So each door it rents for a little bit around 700. What? Well, can I even do a calculation? Was divided by 1350. A little bit less than $700 rent per door. And so go through the whole 9 yards. You minus the monthly taxes, the insurance, property management fee of 10%. Yes. Pay 10% of the rent on your property management. They will take care of everything for you for years to come, if that's the case, right? Anyway, and minus the whole debt service and your debt payment, mortgage in 340. Again, monthly cash flow right from the get go is a whopping $616. This is absolutely amazing. The annual net cash flow is $7,400. And in case you don't know, due to inflation, your rent will increase uh, similar to inflation. So this is just a first year projection, which is mind boggling. Buying a property with cash flow, appreciation potential, I project 3% appreciation potential, which is very realistic. Tax benefit, I'm not going to talk about that. And of course, your tenant going to pay down your loan. Your loan is small little loan, $51,000. Your tenant over the next 5 to 10 years will drastically pay down your loan. So your debt service will be a lot lower into the future, coupled with the rental rate increases in line with inflation, with the loan amortization paid out by your tenant. In the next 5 to 10 years, your cash flow will be even much higher, into the 1,000s. Oh, well, let's project the benchmark, your net monthly cash flow when you do away with your mortgage. Whenever that's the situation, you can have a monthly net cash flow of $1,000. That is your benchmark. Okay, so this kind of property, 1 unit, 2, 3, 4 unit are available in this particular market. These off-market listings that we have on a weekly basis. There are a whole bunch of these property. They come and go, of course. Once the buffer turnkey are completely finished rehabbing some of these properties, they put it into the market, off-market listing for our investors, and we just come and get it, come and get properties and consult with us, and we get you going. Amazing, right? Less than 70 grand, rent for 2%, rent to value ratio, cap rate, cash on cash is simply quadruple than the benchmark if you were to buy the other part of the country. All right. Okay. Keep this in mind. Okay. So you can buy, by the way, if you're really motivated, you could buy several of these properties at one time. You can do 2 or 3 loans at one time. A number of our bosses have done this over the past few years. Although if you're a newbie, you can start at one property at a time, giving the available capital resources and down payment you have available, right? Of course, slow as you want, as fast as you want. So if you want to go slow, buy one property for a few months, every few months, buy one rental, then continue to scale, because the Fannie Mae lending guideline allow for 6 maximum loans for the favorable financing. Of course, beyond 10 loans, you can still do other kind of loans like DSCR, debt service credit ratio. You can do beyond 10 loans, but I'm not going to go too far ahead. Anyway, so if you want to retire early, you are very motivated, and you're committed, you have the capital resources, which is you can retire pretty quickly, right? Using this scenario. I know some people don't like to buy the Midwest market. They don't want to buy older homes, but these homes have a good foundation. The roof has been replaced recently, in the past 5 years, whatever. The electrical system and the boiler and all these things has been updated. It'll pass inspection. Only requires some cosmetic fix up when you get an inspection report on this kind of property. Don't let the picture or whatever of this older property, 80, 90-year-old property, fool you, because this property will last a long time, because this property will continue to be rehabbed by the local team. So make sure they are rentable, they are turnkey, and the tenant knows to rent these kind of houses. Okay, so at the end of the day, so look at the numbers, right? What's the numbers? Around 20 grand down payment, you can finance some of these properties. But I know some of these properties will have a little bit higher or a little bit lower, it depends, right? But I'm using this simple example. 20 grand down payment will buy you that particular duplex for the tune of around $600 per month cash flow. So let's say you have $100,000 of cash, you can finance 5 of these similar properties. Just do the math. 5 rentals, 5 of these duplexes, giving this returns, giving this cash flow, what have you, multiplied by $600 monthly net cash flow per month. Right off the bat, you can achieve approximately $3,000 of monthly net cash flow. Let's take it another level. If you happen to have around $200,000 of cash laying around somewhere in your cash, in your mutual funds, or in your stocks or bonds, whatever, you could potentially scale and finance 10 properties. It may take you a few months, it may take you 6 months, it may take you a year. Depends on your motivation and commitment and how ambitious you are. At the end of the day, you buy 10 of these properties, and that first year, your monthly cash flow per rental is $6 million. So monthly net cash flow is $6,000. So the question you have to ask yourself, I know everybody's retirement is different. The definition of retirement means different things of different people. I get it. But some of you can retire at $3 grand per month, right? Because you have other income, Social Security, pension, 401k, whatever, right? And basically retire after buying 5 rentals at $3 grand net cash flow per month. Or if you want to scale up to 10 rental, you can retire $6,000 per month times 4 months. And we're talking $70,000 passive income for your retirement. Isn't that amazing? So let's do a comparison on if you have a traditional stock market. If you have IRA or all cash portfolio, once you retire, your financial advisor, Wall Street, they typically only on a historical benchmark, they only recommend you withdraw 4% of your portfolio, right? This is the benchmark in, in the stock market. But the Wall Street, because you know how it is, right? When you retire, you're going to reduce your risk tolerance associated with your stock portfolio, mutual fund portfolio, whatever it is. So you want to maintain your you don't want to run out of money. You want to preserve your principal and live off the interest of your IRA portfolio. And you draw $6 grand, give or take, and you reallocate your portfolio from high risk stocks and bonds. And once you retire at age 59 and a half or older, then you're going to reallocate your mutual fund portfolio with money market, bonds, treasury earnings 4 or 5%. So you can stabilize your portfolio without risking principal. So just typical $6 grand at 4% withdrawal in your traditional stock market portfolio. But we're not talking about traditional, right? We talk about real estate, which is amazing with the power of leverage in real estate. If you buy in the right market, every market in real estate is very different. We talked about Buffalo and Niagara Falls. Guess what? Getting back to this, in order to draw $6 grand at 4% withdrawal rate from the traditional IRA retirement portfolio, you will need how much? $2 million. Okay. If you don't believe me, consult your financial advisor. Do your own research. That's how Wall Street, that's how the stock market, that's how they recommend their clients to using these numbers. However, we could equal $6 grand of monthly net cash flow in a way I just explained to you with real estate. All you need is $200,000 cash. $200,000 cash versus $2 billion. Go figure, right? This is no brainer. You are using 10% less money to retire with equal the amount of monthly income as opposed to the traditional investing methodology that you've been brainwashed into believing. Okay. So you know how hard it is to save up to $2 million, any kind of retirement portfolio. Very few people are able to do this. But with 200, with doing real estate, buying 5 to 10 rental, all you need is $100,000 to $200,000 of cash. So you use the power of leverage, power of financing to scale up to buy in local high cash flow properties in the Midwest, in our case, Buffalo and Niagara Falls. All right. So this is a real action plan. It has been done. This is not snuff. This is not overhyped, nothing like that. This is real. It's been practiced by mom and pop real estate investors from anywhere, right? You can live in California, you can live in Midwest, Chicago, Seattle, High Coast area, New York City, New Jersey. You have the ability to buy remotely, passively, and all that using the turnkey system as I provided. All right. So that's basically I have to say. So if you're seeing any value from this video, please like and subscribe to my video. And also, if you're a first timer, please put your email into our website newsletter. So if you do that, you will become a member of our real estate investing club, if you will, all over the country. We have several thousand members with like-minded investors who are who want to are motivated. So yeah, it's that's what it's all about. So anyway, and again, subscribe and email so you can receive weekly email into your email inbox about more investment opportunities, such as information I just share with you, and then a lot more. All right. You can reach out to me. My contact information is below. Thank you for watching. This is Seewing Yee, and I will see you on next video. Have a nice day. Bye bye.